Ripple Labs to buy back $285 million stake in tender offer. Instead of going public, Ripple Labs is providing an exit strategy for early investors through a tender offer. After the deal closes, the estimated value of the company will be $11.3 billion. According to a Reuters story citing persons familiar with the situation, Ripple Labs is preparing to present an offer to purchase a $285 million interest in the company from its early investors and employees. Cointelegraph was informed by a Ripple representative that the transaction was confirmed. Throughout the process, Ripple intends to invest $500 million. The price of issuing common shares from restricted stock units is factored into the budget. Investors can only sell 6 of their assets, according to Reuters. The purchase will raise the company's value to $11.3 billion. According to Ripple's Crunchbase page, the company has successfully raised $293.8 million in 14 fundraising rounds since 2015. According to CEO Brad Garlinghouse, the firm today has over $1 billion in cash on hand and over $25 billion worth of cryptocurrency, mostly XRP. Ripple plans to offer an exit for early investors, so more buybacks are likely. Because of the unpredictability of U.S. regulations, the firm has no immediate intentions to go public in its own nation, says Garlinghouse. Instead of taking the more conventional route of going public, early investors in Ripple have another exit strategy in the form of the buyback scheme. That is to say, rather than undergoing the usual liquidity event known as an initial public offering, investors will be able to withdraw their funds through this method. Ripple is able to keep more of its corporate control and flexibility by opting for a buyback instead than an IPO. Additional regulatory hurdles, volatile markets, and managing investor expectations would all be challenges for the firm in an initial public offering. But with a buyback, Ripple can handle investor relations without the hassles of a publicly listed company. Garlinghouse said Reuters that while it was difficult to grow in the face of the SEC litigation, 95 of their customers are financial institutions based outside of the US. Ripple Labs is the IT firm that created the XRP coin and the Ripple payment system. Claiming to have sold XRP in an unregistered securities offering, the firm has been entangled in a legal battle with the US Securities and Exchange Commission since December 2020. Judge Anna has partially sided with the business in July 2023, ruling that XRP is not a security in relation to its programmatic sales on exchanges. This marked a key turning point in the dispute. The court, however, ruled that XRP sold to institutional investors in fundraising rounds constituted a security. The current market valuation for XRP is $30.7 billion with a price of 5 cents per coin, as reported by Cointelegraph. Fred Risboli, a well-known legal expert, has gone on the X platform to discuss the current lull in the SEC and Ripple court battle and what it could mean for the future. Just so you know, well-known market analyst Lai Martinez has just brought attention to a pattern that he thinks might push XRP to the $1.10 zone, which could be a good opportunity for investors to buy. But can this recently identified pattern ensure that XRP will not stray from its $1.10 price objective? Furthermore, will the XRP community really reap the benefits that they are hoping for once the corporation burns down its whole XRP escrow? Many in the XRP community are worried about the lack of progress in the ongoing legal battle between the SEC and Ripple. Since November 2023, when the schedule order for the remedies phase of the lawsuit was released by the U.S. District Court for the Southern District of New York, members of the community have noticed a noticeable lack of activity, particularly from the SEC. In response to the SEC's apparent lack of action, XRP supporters have gone to numerous social media sites to air their grievances. A recent ex post pro by XRP attorney Fred speculated that the parties may be trying to show that they are amicable by remaining silent, but he was surprised that the SEC hadn't filed a discovery motion for damages yet. Despite the hostile nature of the litigation, Rispoli thinks the SEC may submit this motion 1 week prior to the deadline of February 12th, 2024. The market veteran brought attention to a trend in one of these reports that has dictated the price swings of XRP consistently since June 2022, when XRP changed hands between 29 cents and 42 cents. For more over 18 months, this pattern, which Martinez identifies as an ascending parallel channel, has controlled the price movement of XRP. In a typical ascending parallel channel, 2 trend lines run parallel to one another and slope upward. A slow but steady increase is shown by the pattern. It is worth mentioning that the upper trend line in this pattern serves as a level of resistance, protecting against a possible breakout above the channel. Reclaiming the level would be possible if XRP were to stage a recovery and reach the channel's middle border. Since XRP's price collapsed from its July 2023 high of 9 cents, it has not been this high. Also, XRP might reach a new high of $1, its 31-month high, if it continues to advance to the upper trend line. The recent decline to the channel's bottom threshold, which was partially caused by the fall of the broader market, has also hit investor sentiment hard. This value, which indicates a significant pessimistic outlook, was last recorded last May when XRP traded between 41 cents and 52 cents. According to Ali Martinez, and sentiment data verifies that XRP's weighted market sentiment has dropped to 0.84. As the mood turned pessimistic, Martinez spoke to those who dared to think otherwise. Those people are known to take stands that go counter to the general market mood. At its current price of 5 cents down 1.25 today and 7.29 for the month, XRP presents a chance for these investors, according to the analyst. 24-hour trading volume has also dropped by 19.7%. It gets better. Schwartz made a comment regarding Ripple's management of its XRP holdings while answering queries from the XRP community. A number of XRP holders have voiced their displeasure with Ripple's managed XRP tokens, with some going so far as to say that the monthly releases are putting undue pressure on the coin. In a recent response to a revelation made by Mr. Huber, an on-chain detective, a community member who used the moniker GPD destroyed the escrow brought up this matter. He questioned Ripple's dedication to selling XRP on a constant basis. When asked about Ripple's options, Schwartz said the company could keep its present XRP holdings or aggressively sell some. There is no middle ground, says Ripple's chief technology officer, and the company's original intent was to quickly deplete its XRP supply. A member of the community who goes under a pseudonym asked Schwartz if the possibility of destroying the escrow token should not be examined. In his response, Schwartz voiced doubts about the practicality of the idea and cast doubt on the practical advantages it may provide. No plausible chain of events has occurred to me that may cause such to occur. He further stated that he did not believe it would provide any tangible advantages. Following Schwartz's revelation, another member of the community voiced worry that XRP holders may encounter difficulties for a long time until the escrow is exhausted. By bringing up previous points from 2018, Schwartz refuted this stance. He highlighted the fact that back then, the majority of advocates claimed that lowering the token supply would have a positive effect on price increases rather than a negative one on the market cap. Impressively, the co-founder of Ripple also created Stellar, a project with a supply of 100 billion tokens that is comparable to the XRP ledger. The vastness of the asset supply became a source of concern. In November 2019, 55 billion tokens, or $5.5 billion, were burned by the Stellar Development Foundation. In reaction, XLM's price surged by a pitiful 2 before collapsing by 12 at the end of November 2019. Schwartz highlighted this occurrence, stating that the star burn disproved the story of Burn's increasing costs. Due to possible mistakes and legal limits, the Ripple CTO refrained from providing a more extensive study despite his intentions. That's all for now.